Welcome back. Robinhood completing the seventh biggest IPO on a U.S. exchange this year in an interesting fashion, selling 55 million shares for $38 a piece in the IPO, raising more than $2 billion, but it allocated about 30%, at least 30% here for retail traders, customers, people wanting to get in on the action, which is a bit of a break from the tradition of being locked out and waiting for shares to list here. But what does it mean for the exchange? What can we do to put that into context? Well, we got a guest here who knows quite a bit about the brokerage space. Interactive Brokers Chief Strategist Steve Sosnick joins us right now. And Steve, this is something Akiko and I have been discussing all day on day one of Robinhood's future as a public company, is that retail swing factor. You know, it's a bit unorthodox, but what do you make of that as the path forward? Since it could maybe weigh, we're seeing shares indicated here at $38, around the same price as the IPO. But what do you make of it as weighing on maybe what we could see on the first day of trading?
Well, first of all, hi, Zack. It's tricky when you're pricing an IPO, and I haven't actually opened trading in one for many years, but when I was at Morgan Stanley, I did several. It's tough getting all the ducks in a row. But there's another problem you have with an IPO, and I'm going to call it the Groucho Marx factor, for lack of a better term. It's that, he said I wouldn't want to belong to any club that would have me as a member, and I think that applies for IPOs. The better an IPO looks in initial trading, the harder it is to get into. For better or worse, Robinhood made it very easy for their investors, which is good if you're a customer. They're thinking of their customers, but it doesn't necessarily bode well if you want a big pop.
Yeah, and I mean, we're actually watching shares trade here now at 38.78 in the green here, above where it priced in that IPO at $38. So it looks like it happened, opened officially at $38, in line with what they saw from the IPO price. So I suppose, if you wanted to get in the action, not very far off from, what it was in here. But I mean, now moving forward, now that it's out there, we have this as a publicly traded company. I mean, there are so many question marks still unanswered about the business here, payment for order flow, everything else. But people have pointed to the quick growth of the fact, and the company listed at about half of all brokerages opened from, I think, 2016 to 2021 coming on the platform. Big boost of younger people who had maybe never traded before. I mean, there's a lot to envy, I suppose. But what do you make of the way that they have been changing up the industry?
Well, I think their growth rate is enviable. I mean, many brokerage firms have seen big growth rates in terms of number of accounts open. So we have as well, and I think that's because of exogenous factors. But Robinhood was the one that positioned well in new investors' mind space. The question becomes, can you sustainably translate growth into profitability? And obviously, I'm not in a position to comment on that as far as Robinhood is concerned, or even my own firm. But I think that that's going to be what we have to look for as we go forward. Now that it's a public company.
I suppose, Steve, the other question is really, what happens to this platform when you don't have a pandemic where people spend a lot of time on day trading? You also don't have the meme trade, whether that's going to last, that's another question mark here. And then obviously they've gotten a huge bump from crypto trading too. I mean, it seems to be a lot of factors that really align perfectly for Robinhood over the last year. How sustainable you think that is?
It's tricky. I mean, it become, as you alluded to, Akiko, it's really was sort of the perfect storm in their favor. And a lot of the things that made it so perfect for them are difficult. Can they move beyond what is essentially a core business of delivering individual investors to order flow to the people who pay for order flow? How does that change, and how does that work going forward? Is it just growth, or is the tech mantra of move fast and break things, sort of run out once you have to be in a regulated industry and maturing?
And Steve, we were talking earlier about the complications of having a larger retail allocation, but it does beg the question whether, in fact, a lot of these more consumer-facing companies could potentially follow what Robinhood has done in the lead up to their listing. Of course, they had a roadshow for the retail investors. They had a larger allocation. Does that complicate the process for some of these consumer-facing companies that are looking to come to market, or do you think this kind of catches on as more and more retail traders move the market?
Well, I think it's a matter of what do you want if you're the company going public? Do you want a sustainable base of committed customers? Do you want to give your customers first chance at investing in this company that they've helped support? I think that's not a bad thing necessarily. It is if you want to see a 20-40% pop kind of thing. But I think it makes it more sustainable if your stock is in more committed hands, and rather than being flipped on the first day. Reminds me of the syndicate guy I used to work with who had a picture of a dolphin on his desk. And why? Because those were the flippers.
You gotta love that. I love that. We'll end it there because I don't think we can top it. But Steve Sosnick, Interactive Brokers Chief Strategist, appreciate you joining us here as we now have Robinhood shares trading there off by about 3% in the early minutes of its existence as a public company.